Hey guys, so today we're going to be talking about stimulus economic impact payments. So the second round of the stimulus started going out December 29th, and the payments are $600 per individual and $600 per child under age 17. And these payments were issued via direct deposit or paper check to the information you had on your 2018 or 2019 tax returns, or if you were able to update your information on the IRS non-filers tool before it closed. If you haven't received the direct deposit or the paper check, then your payment either came on the EIP debit card or it could still be on the way. If you checked your payment status on the IRS website and the payment was sent to an account that you do not recognize, most likely it was sent to the bank account that you paid your tax preparation fees through. And from everything that I've read so far, these banks that like TurboTax and H&R Block, like they work with, they sent the payments back to the IRS, and your stimulus payment could be on the way in the form of the debit card any day now. So diligently monitor the mail, especially if it feels like there is a debit card inside. Okay, so if you do not receive a payment at all by the time you file your 2020 tax return, anytime after February 12th, then you'll have to claim the credit as a recovery rebate credit on your 2020 tax return. The recovery rebate credit is a refundable credit. So if you don't owe any federal tax, you will get a refund in the amount of either $1,200, $600, or $1,800 if you didn't receive but qualify for both EIPs. If you do owe federal tax, then your tax liability will be reduced by the amount of the credit that you qualify for. So if you qualify for the $600 credit and your tax liability is $500, then you'll receive a refund of $100. If you qualify for the $600 credit and you owe $700 in federal tax, you will now only owe $100 in federal tax, and you will not receive a refund. Now, the credit does have phase-out limits for high earners. The amount of your credit will be reduced by 5% of the amount of income over the income threshold. So for married filing jointly, the threshold is $150,000. So if you made $170,000, then your credit will be reduced by $1,000. 5% times $20,000, the difference between $150,000 and $170,000. The threshold for head of household is $112,000, and for all other filers, it's $75,000. The credit will be reduced to zero if your income is $198,000 for married filing jointly, $136,000 for head of household. These amounts are increased by $10,000 for each additional qualifying child. So for married filing jointly, instead of $198,000, if you just have one qualifying dependent, your phase-out limit, it would be $208,000. If you have two dependents, it would be $218,000, and so on and so forth. Lastly, there are talks of another $1,400 payment, which could be voted on as early as February 1st after the House is back in session. There is also talks of expanding who qualifies for these payments, such as dependents of any age, like parents, college students, or children who have disabilities over the age of 17. Also, these payments could include mixed status households, which are households where one or more people aren't U.S. citizens, but the dependents are citizens, or the spouse is a citizen, so they might not have qualified before, but this time they might. There's also no guidance as of yet if this third payment would be direct to individuals or it would be captured again as a credit on your 2020 tax return. If you have any questions, visit my website, luxurytaxprep.com, or send me a DM. You know I am